Stablecoins are literally the most important part of investing in crypto. Without stablecoins, we are left in the cold in a risky asset that fluctuates in value all day long. In fact, if your salary was to be paid in a non-stable coin like Bitcoin, you will never have the same salary because the value of Bitcoin will always fluctuate. So it is this volatility that gives stablecoins their importance. There are various types of stablecoins, but for the purposes of this video, we are going to be looking at a particular stablecoin. I will make a dedicated video on stablecoins because it is very important. Hello and welcome to the channel. My name is Herve, and every other day on this channel, I try my best to bring crypto to the understanding of anybody. I bring you predictive analysis, research, and tutorials to help you navigate your way through this vast world of coins and tokens. If this is the type of content you are interested in, take a second to click the like button, subscribe to the channel with your notifications on so that you do not get to miss any other value-packed video like this one. Also note that whatever I say on this channel is supposed to be taken as education only, not financial or investment advice. Now, for the past couple of weeks, we have seen a lot of bloodshed in the markets caused by a particular cryptocurrency called Terra Luna.
So if we look at the one that fell really low yesterday, that would be UST, which is backed by Terra.
You know, Terra really is impaired here. At this point, the next big thing to watch would be exchanges delisting these tokens.
Well, I mean, the decline looks more like a demolition.
So, what is Terra? Now, let's clean things up. I think some people have a misunderstanding with this. Terra is the name of the ecosystem or the network. Luna is the name of the coin or currency of that ecosystem. Now, Terra is an ecosystem for decentralized algorithmic stablecoins. The term algorithmic stablecoin is used to describe a coin that relies on a certain algorithm to match its price to that of a given fiat currency. So perhaps Terra's UST failed because the algorithm did not do its job? No, and you will see why in a moment. Now, fiat currency is regular currency like the dollar, the euro, the pound. Within the Terra ecosystem, we have the UST stablecoin that should have the same value as the dollar. We also have the EUT stablecoin for the euro and the KRT stablecoin. So let's take a brief look at who came about with this idea. Terra was founded in 2018 by Daniel Shin and Do Kwon. Born in 1991, Do Kwon studied computer science in the University of Stanford in 2010 and graduated in 2015. He worked in Microsoft and Apple, and in 2018 he founded Terraform Labs with his friend Daniel Shin. Now, Daniel Shin later left and found his own company called Chai, so we are going to focus more on Do Kwon. Shortly after Daniel Shin left, Terra started gaining a lot of investor interest and got funded with a total of $150 million from VCs like Pantera Capital, Arrington Capital, and Galaxy Digital. Now, Pantera Capital has a lot of cryptos under its belt, like Stratos, so be on the watch. Other well-known companies in the crypto space like Binance, Huobi, OKX later joined the Terra boat. Now, clearly we see that all of these investors saw a potential dollar killer here, yes? But it now seems they were all wrong. Or were they? And yes, Coinbase also joined this Terra boat, including moi. So, how does Terra work? Terra has its own native coin called Luna. Luna is the coin used to back all stablecoins on the Terra ecosystem. For example, UST. Now, UST is Terra's stablecoin for the US dollar. We all know that the greater the demand for anything, the more valuable it will automatically become. And this, of course, also works the other way around. On the Terra blockchain, in order to mint or create more UST in case of increased demand, an equivalent dollar amount of Luna needs to be burned or needed to be burned. So, investors who believe that the demand for UST will be greater in the future buy Luna, because in order to mint UST, Luna will be burned. This, of course, reduces its supply, and as its demand stays the same or increases, its price goes up. Simple economics, yes? Now, if UST's high demand makes UST's value to rise above $1, Luna holders will be incentivized to trade in $1 worth of Luna coins for 1 UST because they bought the Luna at a cheaper price. So these Luna holders sell this UST for greater than $1 and make a profit. And as more UST is being sold by these holders, it naturally brings back UST to $1. Conversely, if we have UST below $1, UST holders will trade in UST tokens for Luna coins. Now, this trade-in is done on the blockchain, so they will trade in these tokens, thereby reducing its supply and bringing its price back up to $1. And they will also get more Luna by dollar value. So this can be regarded as a complete balance between Terra's UST and Terra's Luna. Now, Luna is also used for staking in the Terra ecosystem, governance, and to pay for transaction fees. And yes, this also gives it more value. In the Terra ecosystem, we have two main protocols, or at least we used to have two main protocols. These protocols are Anchor and the Mirror protocol. Anchor protocol is simply a decentralized bank that allows you to save UST and earn a high interest of 20% APY, or annual percentage yield. This high APY is what made people to think Anchor was a Ponzi. To put this into proper perspective, most traditional banks pay less than 1% APY. So 20% is strikingly high, and it did raise a lot of eyebrows. Now, the idea of Anchor being a Ponzi is simply because most people do not understand how Anchor works. Anchor generates 10% APR on their borrowers. Now, APR is annual percentage rate. This 10% goes to pay APY. Now, you might be like, what's the incentive for borrowing on Anchor? Anchor incentivizes their borrowers by letting them earn 7% in ANC tokens, which are not much in dollar terms, but you can think of it as cashback when you shop. Now, Anchor's idea was that the Terra ecosystem will grow so large that it will be able to support the 20% APY, and by that I mean Terra's ecosystem, its protocols will gain more adoption, and thus Anchor will continue to have more borrowers. But this did not happen as such, as there were more people lending out UST for a 20% APY. This made Terra to replenish the fund with $450 million in February. So yes, it was unsustainable, and thus an imminent collapse or bankruptcy was on its way. And that was it for Anchor. Now, we also have the Mirror protocol on the Terra blockchain, or at least we used to have. The Mirror protocol is a blockchain-based protocol that allows users to trade synthetic assets on the Terra blockchain. Now, if you have any problems with understanding what a blockchain is, I will leave the link to my video about it in the description, so you may click on that after you are done with this one. Now, synthetic assets on the Mirror protocol are called M assets, M for Mirror. These assets can be anything like stocks represented in the blockchain as M assets. The protocol uses smart contracts to enable these trades, and it receives price data on the assets its tokens represents through decentralized oracles that is updated every 30 seconds. So yes, the prices of these assets are pegged to their real-world counterparts. So the Mirror protocol and the Anchor protocol help to bring the Luna coin more value, because as more people want to stake UST to receive high APY, that demand for high UST means that more Luna coins will need to be burned, thereby reducing its supply and increasing its price. And also, M assets on Mirror are bought and sold in UST. You get the point. Now, the Terra ecosystem had $58 million funding rounds from 29 investors. The Terra Luna coin started out at an ICO price of 0.8 cents, and the token sale ended on the 7th of March 2019. Luna got listed and started trading on major exchanges like Binance on the 17th of August 2020 at the price of 41 cents. From January 2021 to March 2021, Luna went on a ginormous rally, bringing about a 49x gains for its investors. Now, what may have caused this rally as per my research is, in January, Terra received a $25 million fundraising round, backed by venture capitalists and investors like Galaxy Digital, Pantera Capital, Coinbase Ventures, and even returning investors such as Arrington XRP, Hash, and Kinetic Capital. Now, all of this made Luna rally up to $22, and as the entire crypto market started facing turbulence in April, Luna started to crash. Now, we can all agree that the crash was more like a slight dip as compared to what we witnessed. So, Luna crashed to $13, and as the terrible COVID crash came in May, Luna lost about 81% of its value from its all-time high. Now, as May ended, giving Luna a bullish engulfing pattern, which I must say looks perfect. Luna then consolidated with the rest of the markets, and as July came in, Luna kickstarted its engine, and its price did not only surpass its all-time high but continued to rally endlessly until we will come to that. Now, my research suggests that Luna's humongous rally was because a whole lot of projects started launching on Terra, including Orion Protocol and Pylon Protocol. And again, Terra received $150 million funding from the VCs previously mentioned. As we moved into the year, Terra's Luna coin continued to rally as Terra's ecosystem developed a wormhole that would bridge Terra to Ethereum, Solana, and Binance. Also, a bridge between Terra and Harmony went live, which means people can port Terra's UST coin between Terra and Harmony. And so many other updates happened, but the biggest of them, which is the main catalyst for Terra's growth, is by October, when the SEC chairman Gary Gensler was warning about stablecoin restriction, which he called poker chips. And yes, Jerome Powell, who's the Federal Reserve chairman, basically said that stablecoins pose a threat and exist within an undeveloped regulatory framework, which honestly I find dumb, because stablecoins like USDT only give more power to the dollar. They are essentially mirror assets to the US dollar. Fast forward to 2022, Luna was doing fairly well, crashing with the rest of the market when there is a crash and pumping accordingly when there is a slight pump. The founder of Terra, Do Kwon, now announced the launch of the Luna Foundation Guard. And as the name depicts, this foundation will guard the UST peg and also allocate resources to the growth of the Terra ecosystem. This foundation guard in February raised $1 billion by selling Luna coins to buy Bitcoin. By March 23rd, Jump Trading, who is one of the members of the Luna Foundation Guard, proposes a mechanism on how to deploy Bitcoin reserves to prop UST's price in times of crisis. So what we understand here is depegging of the Terra UST coin from Terra's Luna was something that was always considered. By March 28th, the Luna Foundation Guard's purchases of Bitcoin are more than 27,000 Bitcoins, which is about $1.3 billion. By March 30th, the Luna Foundation Guard purchases 5,773 Bitcoin and again makes some purchases in April, raising its total Bitcoin holdings to 35,768 Bitcoins. So, what's the purpose of all these purchases, you might ask? As I follow with Do Kwon's interview, countries usually have reserves for international trade. Likewise, Terra also needs its own reserves. The most trusted crypto in the entire crypto space is Bitcoin. And as he explained, having a stable coin that is backed by the native coin of its blockchain is not convincing enough to the masses. But everyone in the crypto space trusts Bitcoin. So if you collateralize your decentralized stablecoin with a trusted cryptocurrency in the crypto space such as Bitcoin, everyone will trust that stablecoin. So buy his model, and this explains where the funds to buy Bitcoin will come from. Instead of burning $1 worth of Luna coins to mint 1 UST, only a fraction of the Luna coin will be burnt, and the rest of it will be used to provision the decentralized reserve. By that I mean the rest will be used to buy Bitcoin. Now, burning in crypto means sending to an address. This address does not have a key, so any crypto that is sent to this address is lost forever. That is what burning means. So instead of $1 worth of Luna to be burnt, a fraction of it will be burnt, which could be 40 or 60 depending on Bitcoin's volatility. The rest, 30% or 40%, will be used to buy Bitcoin. So by this reasoning, we see that UST is partially backed by Luna and by Bitcoin. Now, Do Kwon also comes up with another brilliant idea that the Terra Luna Foundation Guard, or LFG, also purchases the native coins of the blockchains that Terra will be expanding into. And on the 7th of April, the Luna Foundation Guard bought $100 million worth of AVAX coins with UST coins. And on the 11th, it again at $173 million worth of BTC into their wallet, making 39,888.97 BTC. On the 19th of April 2022, Luna outperformed the entire crypto market by a 17% price surge. Little did anyone know that it was indeed taking its last breath. Here comes the climax. On the 7th of May, a whale tracker, Herve Whale Watching, shows an 85 million UST swap for USDC. Now, USDC is a dollar-backed stablecoin. On May 8th, UST drops to 98 cents after a large whale drops $285 million worth of UST coins on Anchor. This in turn depegs UST from its peg and Luna crashes by 20%. By May 11, Terra's Anchor protocol's total value locked drops by $11 billion in 2 days. These as compared to now were the early warning signs of a more horrific crash. By May 12th, Luna falls by 96% to 10 cents. And the Terra blockchain got halted because the Luna price drop posed a security risk to the network. On May 13th, Binance and OKX stopped the trading of Luna. However, Binance resumed trading. They just couldn't let go of those trading fees. Now, as things got out of hand, Do Kwon submitted a revival plan. And according to this plan, the Terra network will have to fork. Now, forking here represents an upgrade or complete change to a network. And according to Do Kwon, the old Terra network will be Terra Classic and the new Terra network will retain the name Terra. And this new Terra will have 1 billion tokens that will be distributed to Luna and UST holders on the 27th of May, this Friday. Now, by holders, I'm talking about people holding UST or Luna in their wallets, not on exchanges. Now, we all know a lot of people have lost a lot of money with Terra. So, if these new tokens are distributed to Luna and UST holders, there is a very high chance that all of them will be selling. When people lose their money investing, they develop the strong urge to get their money back. So giving free tokens to UST and Luna holders is a great way to crash the price, as many of them have been in the red for a very long time. As I follow in my research, the tokens will be allocated as follows. 30% will go to the community pool, which will be controlled by stake governance. 35% to Luna holders before the crash, 10% to UST holders before the crash, 15% to UST holders after the crash, and 10% to Luna holders after the crash. Now, for all of these, apart from the 30% to the community pool, 30% of the tokens will be unlocked at the genesis, or say when you get the airdrop, and 70% will be vested over a period of 2 years. Now, keep in mind, not only investors are involved here, even projects had their funds on Anchor to generate profits for funding, which most of it got lost. So yes, I think this will be a selling spree. Now, where is the Bitcoin that was purchased, which was supposed to be used as collateral? You see, as the value of UST started to drop, the Luna Foundation Guard started to sell its BTC to buy off UST. On May 9th, the Luna Foundation Guard announced that they will loan $750 million worth of BTC to over-the-counter trading firms to help protect the UST peg. Around the same time, $750 million worth of BTC was sent to a BTC address linked to the Luna Foundation Guard to a new address, and later that evening 30,000 BTC was sent from other Luna Foundation Guard wallets to this same address. According to Elliptic, a blockchain transaction tracking firm, within hours that day, a total of 52,189 BTC was moved to a single account, and yes, this was Gemini Crypto Exchange account. Now, it is not entirely clear if this was done to bring back up the price of USD to $1. On May 10th, the remaining BTC owned by the Luna Foundation Guard, which is 28,205, was moved to another crypto exchange wallet, which appeared to be Binance. So, you must have been wondering, was this an attack? Do any of these events point to anything solid? Do Kwon, the founder of Terra, has been known for ranting about Luna all over Twitter, and some people seem to believe that Terra's competitors may have attacked the ecosystem and caused the crash. However, we also see that at the very start, when nothing was happening, when we had just regular market volatility, someone exchanged 85 million UST for USDC. That in itself for me was a huge red flag. This, to the best of my knowledge, was a planned and coordinated attack. So, my thoughts: who will stand the most to gain if a decentralized stablecoin failed? The banking system, and by that I'm talking about BlackRock. If you haven't watched my video about BlackRock, I will leave the link to it in the description. Do your best to watch it, because I promise you, you will be stunned as to how much they own and how much they control. One of the largest stablecoins, like USDT, is backed by the dollar, or at least that's what they tell us. So it relies on the existence of the dollar to exist, basically. Now, this also makes me think, if the entire purpose of cryptocurrency is to replace the dollar, this will mean that USDT or any other stablecoin that is backed by the dollar will eventually go to zero. I mean, if we all in the crypto space believe that the dollar will one day go to nothingness, or to say worthless, then any stablecoin that is backed by the dollar will also go to nothingness. UST is, or say was, a stablecoin that was going to be backed by Bitcoin, which is in fact digital gold that is trying to replace the dollar as the world's reserve currency. This would have made UST very useful, because Bitcoin would have done what it does best: be a store of value. Meanwhile, UST could be used for day-to-day payments. So if you think about it critically, you will know that any government, or say any institution that really depends on the dollar's dominance to exist, will not let a decentralized stablecoin to be backed by a decentralized potential reserve currency. Now, I know a lot of people will be thinking, would it be wise to buy Luna now? And to that I would say, no, I do not believe it is wise to buy Luna now. My reasoning behind that is, the new Luna that is to be forked out of the old one will not include an algorithmic stablecoin. The Luna coin had most of its appreciation because of its backing of the UST stablecoin. Without a stablecoin, the Luna coin may not have that much value. I think even if the UST stablecoin was maintained in the Terra ecosystem, it will have a very hard time being trusted again by investors or users. However, if it can be proven that this was in fact an attack on the Terra ecosystem, Luna might still have a chance if they had the UST stablecoin. So, thank you for watching this video. I hope you did learn a lot from it. I hope I did give you enough knowledge for you to be able to make your decision. Let me know down in the comments what you are planning to do. Let me know if you think it is wise to get into Luna now, and let me know what you think could be the future of this crypto. Is it as dead as everybody says? Or maybe this is just a planned act to make everyone run away from it. I will see you in my next video.